the complete private market went into discount. Those people were not buyers, and yet China imported 100 tons. Now that is the smoking gun that the People's Bank of China is buying that gold, and it is importing it. It's being reported at customs statistics. It does not go through the SGE, it goes to Beijing. Gold is the Achilles heel of the US dollar, so everybody's looking at gold these days. Just because the People's Bank of China started this whole crazy bull market, the end goal for them is have an international monetary system that is now very dollar-centered, in which they do not provide the world reserve currency, so to say, in the way that the dollar does, but they want to have the renminbi as a trade currency. And then when countries have a surplus, they exchange those renminbis for gold to have gold as reserve. If you want to have a plan B, what they want is a plan B that works. And it only works if everybody participates.
Hi everyone, and welcome back to Reinvent Money, a podcast about money and power with me, your host, Paul Buitink. Today I'll be talking with my old buddy and fellow Dutchman, independent gold analyst Jan Nieuwenhuijs, known for exposing the true gold flows to China, which are different from what China is formally reporting to the IMF. Today we're going to discuss in detail how much gold China has, how the Shanghai Gold Exchange works, why China attaches so much value to gold, and what the future role of China and gold will be in our global monetary system. Hi Jan, good to see you, mate.
Hi Paul, how are you?
Yeah, I'm great. We used to hang out in Amsterdam a lot and discuss the gold market over a cup of coffee, but you realized well before me that continental Europe is going down the drain. So you fled, and now you're based in Bonaire in the Caribbean. Lucky bastard.
I live in the tropics. Yeah, life doesn't get better. No.
Yeah, good for you. Look, Jan, you've been doing a lot of research on China's gold. You're also the go-to expert for a lot of mainstream media when it comes to understanding the true Chinese gold holdings. So let's just start with a basic questions. So why does China value gold so much?
Well, first of all, it's historic. So they have a long tradition in saving in gold. China had a lot of monetary systems. They used jade as money, silver, paper, copper, all sorts of things, but never gold. So gold was always a store of value for them. And there was a break in that when the communists came into power, and it was forbidden to own gold. But when the market was slowly liberalized, starting in the 80s, and especially with the launch of the Shanghai Gold Exchange in 2002, that old love came back, and also because the government started stimulating the people to buy gold, because they started to see that, it's very important for a nation to hold gold, to be resilient against external shocks, and to live through, monetary cycles, business cycles, big changes. So one part is historical. The other part is, of course, that China has been an economic miracle for many years, and growth was very large, and to keep their currency low and to boost their exports, they accumulated a lot of foreign exchange reserves, and those were primarily dollars so many years ago. And when they knew before, but in 2008 it was a first sign to them, like, things can go south as well, so we might as well hurry up with our plan B, and that is gold. So then they started motivating their people more to buy gold. The PBOC continued to buy gold. That went on for a couple of years, that mostly the people bought gold. It was really thousands of tons every year that the Chinese people bought gold. But after the war in Ukraine, early 2022, and the weaponisation of the dollar, which is the freezing of dollar assets of Russia, that really scared the People's Bank of China, and that's when they ramped up gold buying a lot. I can show you some charts about that. So I'm going to share my screen here, entire screen, this one. So if we look here, this is a chart that on one hand shows reported buying. This is what the PBOC reports to buy every quarter. Now, and we'll get to this. This is my estimate of what they buy in total. So with reported and unreported buying or secret buying. So what you can see is in 2022 that total buying, estimated buying, exploded. And their reported buying also went up a little bit. So there was a correlation between the two, but they only declare or report to the IMF, a small percentage of what they truly buy. And so it's so much more than what is reported. And that, of course, has an impact on the price. So if we look, this is an old chart. It's not updated until today. But this is what they did. They broke the gold market by breaking the peg between the gold price and a 10-year TIPS yield, which is, in financial markets is the real yield. And so that was always, and it's funny enough, I was just thinking about before this interview about an interview we did in, I guess it was 2021 or around that time. And I was in the Netherlands. It was in your studio at your company. And we were talking about this correlation, and I said it has to break at some point because it doesn't make sense. And I didn't get it completely right in my logic and whatever, but sure enough, a year later it broke. And this is purely by the PBOC. This is what the PBOC did. They broke the peg, and now sometimes it was even let's say that the correlation went the other way, because if real yields go up, you can also say, well, that's for a currency not a good sign, right? I mean, if you get hyperinflation, yields they skyrocket, and so this changed the gold market big time, and it was primarily because of the PBOC started buying here, and these are quarters, right? But my numbers are very much based on estimates by the World Gold Council, who does field research about what central banks in total buy every quarter. So you see it here exploding in Q3. It could have been Q2 as well, but they just lumped it into Q3. But it's very clear what happened, and so that's a bit of a long answer to your question.
Yeah. No, interesting, and also very clear. Just what you said is that after Russia freezing, or after the West freezing Russian assets, you clearly see a big uptick in both reported and especially unreported buying. So I understand the reported buying that's what they disclose to the IMF, but how does the World Gold Council come up with the other numbers than the blue bars in your chart?
Well, the blue bars is something I calculate. That's not what they publish, but I calculate it, and my analysis is based on a few sources or on a few, let's say, elements. First of all, I started seeing something really strange in the Chinese gold market, and I guess I also have a chart about that. The blue bars is something I calculate. That is not something the World Gold Council does. What the World Gold Council does is they calculate central bank buying, what they think central banks are buying in total. And they use the IMF's number, and that is what all central banks report, but they also do field research. And the World Gold Council, you should know, is an entity that has a lot of connections with billion banks, with refineries, with transport companies, with central banks, with all the sectors in the industry. So they get intelligence, and based on that, they come out with their estimates of what central banks in total are buying. Now, really easy. If you compare what the World Gold Council reports that central banks are buying every quarter to what the IMF reports central banks are buying every quarter, there's a large discrepancy. And my sources at several companies in the sectors I just described say, well, that is largely due to the People's Bank of China. So that is good information, but that doesn't make a case because there's no data and not really a smoking gun, etc. So But when I heard this, I was already on the track of finding it, so to say, because I found some strange things happening in the Chinese gold market starting in 2022. Now, here's a chart called China gold supply and demand. And what you see is mine output, net imports, and STE withdrawals. Now, in the years prior to 2022, mine output and net import was always lower than STE withdrawals. And that is because in China, the SGE, the Shanghai Gold Exchange, is the central exchange through which most of all the gold flows. So if gold comes out of the ground in China, it's sold through the SGE. If gold is imported, it has to be sold first through the SGE. Scrap supply also, or disinvestment, that usually goes through the SGE. So, you have a very easy to understand formula that is mine output plus net imports plus recycled gold should equal SGE withdrawals. We're not going to go into details about stock carryover every year, but that's basically the simple formula, and it always worked. If you compared SGE withdrawals to the other, that's the demand side, to the supply side, it all made sense. Then suddenly in 2022 and the years after, you can see that there is a lot more gold going into China than being withdrawn from the SGE vaults. Now that is because the People's Bank of China does not buy its gold on the Shanghai Gold Exchange, because gold there is quoted in Renmibi. And the People's Bank of China wants to diversify its dollars, and you can't buy gold with dollars on the SGE. So they go to London, they go to refineries abroad, they go to Switzerland, all sorts of places to buy big bars, not the consumer type bars, big bars with their dollars. So they don't buy it at the SGE, but what they started doing in 2022 is they said, for example, to JP Morgan in London, okay, we want to buy 50 tons this month, and you take care of the shipping. We just want to, bring it to Beijing and ship it to Beijing. So JP Morgan ships the gold to China. Then in China, JP Morgan has to deal with the customs department, and then that is why it shows up as a net import in customs statistics, although it does not go through the SGE. It goes to the vault in Beijing. And so that is the explanation for what you see in the years 2022, 2023, 2024, is that there is apparently a lot more gold going into China that is not flown over the SGE. Now, another piece of evidence is taking a look at the premiums in China. So here we have a long-term chart by Gold Charts R Us, and you should know about global gold flows that before the war in Ukraine, it was pretty easy. It was pretty understandable when gold moved across the globe. The West was driving the price, and if the West was driving the price up, you saw a lot of gold from Asia flowing towards the West, and premiums in the East would fall to discounts because they were selling, and vice versa. So if the West was a seller, premiums in Asia would go up. Now you see that here in the first green circle. You see here in 2013. Remember that big crash we had in gold. Then the SGE premium went up because when the West sold, the East was sort of the shock absorber. They would be buying. They had a long-term horizon. They thought, oh, fine, if you want to sell gold, we'll take it. We'll back up the truck. So the premium in China would go up. And here you see it vice versa. The price in 2020 went up. And what did the Chinese do? They sold, taking profits. Because you see this steep discount here in China on the SGE, because it's not allowed to export gold from China. So what do you get when people sell in China? The local price goes down relative to the international price. Now here on the right in the green circle here, you see a kind of a mixed picture. This how the gold market functioned before the war in Ukraine. It's not like that anymore. And we can see that here, for example. So here is a chart from 2025. And you can see here, for example, that the price goes up and the premium also goes up. So the Chinese, the private sector, when I'm talking about the SGE, that's always the private sector. So we saw the Chinese are also driving up the price now, the Chinese citizens. But here, something else happened. In September, the price went up. The Chinese thought, nah, not for us. They started selling. The SGE flipped into a discount. But then if you look, and I don't have a chart of that, but China did import 100 tons of gold in September. So the SGE, the complete private market went into discount. Those people were not buyers, and yet China imported 100 tons. Now that is the smoking gun that the People's Bank of China is buying that gold, and it is importing it. It's being reported at customs statistics. Does not go through the SGE. It goes to Beijing. I have another chart here of last year, 2024. You saw in the months September, October, November, December, all through those months, the SGE was trading at a discount, and still, see the yellow bars, the gold imports were about 100 tons a month. That's the People's Bank of China, very clearly. And so things like that show me how much the People's Bank of China is importing. You can also take, but it's a more complicated analysis, the direct exports from the UK, because the UK only stores large bars, and everything they export must be large bars. And if that goes to China, then you kind of know, especially when the SGE is trading at a discount, that's, the People's Bank of China buying large bars in the UK. So that is more or less the analysis of how I know the People's Bank of China is buying gold secretly. So you can all stitch it together and, make Excel sheets and make your analysis from that, from what I just said.
Interesting. A bunch of questions. First question. So why is the Chinese, the PBOC buying secretly? Why are they not just reporting everything? First question.
Several reasons. They're cautious. On one hand, they have an incentive not to drive the price up too much, because if they would be honest about what they would be doing now, if they would go talk to reporters or journalists from the Wall Street Journal, and they say, hey, look, we're going to sell treasuries like there's no tomorrow, and we're going to buy gold, only gold with it. That would double the gold price in a day, because they're still sitting on, I don't know from the top of my head at the moment, but they're still sitting on 700 billion of treasuries, I believe, and probably some other dollar assets. So they're, they want the most value for their money. So what they do is they buy it secretly, so the price doesn't rise too fast, and in that way they can buy more gold with their dollars. They also want to signal the United States that, look, we're not joking here. So they also want to signal something and drive up the price and signal the United States to, of course, gold is the Achilles heel of the US dollar. So everybody's looking at gold these days, just because the People's Bank of China started this whole crazy bull market. And I'm not talking about the part from 2015 until 2020, that it was going up. But since the war in Ukraine, and especially the last 2 years, people are quite serious looking at gold like, maybe, this can hurt the dollar. And the United States has a problem with its fiscal policy, and also with the weaponization of the dollar, which doesn't make a lot of friends worldwide.
Yeah. So second question: if they want to buy secretly, why would they still use the customs channel and making it leaving a trail in such a way that Jan Nieuwenhuijs can find out what they're buying? They could be smarter about that, right?
That's a good question. To be honest, I do not know, but I think it has to do with the two things I described earlier. These two incentives that they have. On one hand, they want to keep it. They don't want to show everything they do to keep the price a bit low and not make it go quickly up too fast, get more bang for their buck. And on the other hand, they want to give the world a signal about what they're doing and stepping up their game in terms of de-dollarization. And you also read about Cambodia, for example, that is now storing gold in China, and China is also, and that all comes from the People's Bank of China. The gold market in China is purely managed by the People's Bank of China. The SGE is a subsidiary of the People's Bank of China. What they're also doing now is setting up an international clearing system in Hong Kong. And after Hong Kong, there will be other cities. So the end goal for them is have an international monetary system that is now very dollar-centered, in which they do not provide the world reserve currency, so to say, in the way that the dollar does, but they want to have the renminbi as a trade currency. And then when countries have a surplus, they exchange those renminbis for gold to have gold as reserve. That's a neutral asset. That's a lot better than dollars. And but they still, have their influence with the renminbi being the trade currency and not the dollar.
Yeah, let's talk about that a little bit more. But first, a few more questions. So I can imagine that China, because they have a huge mining supply as well every year, they basically get all the gold from the mines and also add that to their stock. That they would not disclose that. So you have the reported buying, you have then the customs flows that you've discovered, and then I guess on top of that, there must also be even more secret flows of gold coming from their own mines, for example, that also don't go through the SGE, but directly from mines to refiners to the People's Bank of China. Or do you see that differently?
I see it differently because what I explained a little bit in the beginning, how the gold market, the domestic gold market in China is structured. The domestic gold market is separated from the free trade zones, right? So that's a little bit of a detail to add. But the domestic gold market is structured in a way that most supply flows through the SGE and most demand also meets at the SGE. So everything goes through the SGE. The People's Bank of China designed it this way so they can assure that the quality is good on the SGE. They can monitor everything that's happening. You saw the tax rule that was implemented earlier this week. That was a bit of a scare in the gold space, but that also is an incentive to make more of the jewelers and all the entities in the gold market members of the SGE, again, to make more gold flow through the SGE. Now, they have a lot of incentives, rules, tax things to make the domestic mine output go through the SGE. And it goes to the private sector. So everything that happens in China through the SGE, that's all the private sector. So the domestic mine input, that all ends up in the people's hands. And that's not something the People's Bank of China is buying. Also because, if they would be buying gold from local mines, they have to pay in renminbi and they can't diversify their dollars that way. And, if they pay in renminbi, they just expand their own monetary base, which is inflationary.
Now, but I can imagine if you want to keep your flows secret and you have certain mines in your country, and maybe some of them are owned by state companies, then there is an easy way to keep those flows secret without utilizing SGE, but just doing it discreetly. But yeah, in any case, what are your numbers then now? Because formally they're supposed to have like 2,300 tons or so, China, and what's your number?
My calculation at the end of the second quarter is 5,300. So they have 3,000 tons more gold that's more than double than what they report to the IMF. So that's significant, and it makes them the second largest holder after the United States. More gold than Italy, more than France, more than Germany, more than the IMF. And yeah, I think of course, a lot of that was acquired since the war in Ukraine. So and it rests on a good analysis. I think I truly think that when the SGE is trading at a discount and you still see 100 tons going into the country, that is the smoking gun about the People's Bank of China buying. So it's really significant, and more media and people are taking note. Since I started writing about this, I guess 1 or 2 years ago, Goldman Sachs was the first one to copy my research. Then it spread over some obscure financial blogs on the internet. But then came Bloomberg, the Washington Post has reported about it, Time Magazine. I've been called by a lot of other journalists. And it's funny that, if I can share this, journalists have, when I first come out with this type of news, they're not allowed to share it by their editors, because they need to have a second source and blah, 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 blah. And no matter, how much you know about the gold market and how accurate my analysis is, they just can't publish it. But then if Goldman Sachs does it and Bloomberg does it, then the Washington Post can do it and Time Magazine, and then they suddenly all can do it. So the cat is out of the bag, we say in Dutch, and that's also why the gold price is going up as fast as it does now.
Yeah, so a lot of the gold price rise we can credit you for then, Jan.
I didn't say that, but no, in my dreams.
Yeah. Hey, but then the US has slightly over 8,000 tons. Then China is around 5,000. Number two then. But if you look at the number of people living in China or the per capita basis, there's still a lot more for China to buy. If they want to mimic the US, then they would probably have to have 4 times the amount that the US has. So they would go to 32,000 or so. Is that realistic? Do you think they strive for an amount like that? Or what's their long-term goal when it comes to acquiring gold?
Well, if you want to compare those countries, it's not only important to look at citizens, but also compare GDP, compare the money supply in both countries. And we just talked about, I just made a distinction between monetary gold owned by the central bank, but also privately held gold. And next to this number of 5,300 tons by the PBOC, but the citizens of China, the people, also hold 25,000 tons of gold, which is probably more than the US citizens hold. And it has all been acquired since 2008. Most of that has been acquired since 2008. So that's a lot of gold. And I don't know what their end goal is. I have read articles from directors of the China Gold Association that they want to have more gold than the US, but it didn't say what their time horizon was or their long-term strategy. But I do think that they want to have more gold. They want to diversify their dollars. They want to bring back their treasury holdings to not have this interdependence with the US. But they also just want to, revolutionize the international monetary system by what I just said, trading more in renminbi, have partners in the region that store their gold with them, or at least, exchange their renminbi for gold at the SGE, the Shanghai International Gold, I should say, in the free trade zones, that is. And in that way, move away from the dollar.
Yeah. I read also in the latest World Gold Council report that the main reason for Chinese to buy gold has also been the tensions with the US. So every time you see the trade tensions between the US and China flare up, you see Chinese buying more gold. And I only expect, unfortunately, to see these relations deteriorate over the years when the US is basically losing its hegemony status. Some other interesting points to note then is, like you mentioned already, Cambodia willing to store gold in China and Shenzhen and at the SGE, even though they don't confirm, but insiders say that Cambodia is going to store gold there. Of course, London, Switzerland, the US, those were the traditional places you would store gold. Now China is also becoming a hub for countries. Do you believe it makes sense for Western countries, such as the Netherlands, for example, given the new geopolitical order that we're entering, would it make sense for Holland also to have some of its gold stored over there instead of New York, London, or Canada, where we currently store our gold?
No, 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 no. You can better store your gold with friends that have the same values. For Cambodia, for example, it's a bit more easy because they're close to China and they have more relationships with China. China does a lot of investments in Cambodia, and it's funny because in the Bloomberg article that exposed this, it said Cambodia is not moving gold towards China, but it will be buying gold from surplus renminbi in China. So they're going to build a new gold reserve, and they can repatriate as well. But that was very significant for me that they, when they have surplus renminbi from trade surpluses, they will buy gold with those renminbi on the Shanghai International Gold Exchange. For the Netherlands, what we have seen, for example, is that without being judgmental about it, you have the East with different values, and you have the West with their civilizations. And for example, Maduro, the leader of Venezuela, which also has a different point of view on, he's a dictator, let's be honest, and he was blocked from having access to his gold in the UK. So that can happen to your gold if you store it with unfriendly countries. So it's probably going to be China's friends who store gold with them, and countries in the Netherlands, they will store the gold in the UK because that's also a liquid market, right? You only want to store gold abroad because you might need it someday in some big crisis, and you need the gold as collateral to get new loans to, I don't know, solve a balance of payment problem. I don't know. But for us, it doesn't make sense to do that in China, also because then you can get a renminbi loan, and I don't think that the Europeans need that.
Maybe for now they're not interested in that, but maybe in the future it becomes very relevant for European nations to get their hands on renminbi. But at the same time we see a trend, of course, towards repatriation.
If there is a scenario in the future in which the renminbi is really a dominant global currency, then maybe it would make sense to store some gold there. On the other hand, still, only if relationships are good, and China is not really known for having a good rule of law or things like that, and it still has a closed capital account. All these things that used to make the dollar from the United States the world reserve currency. So it could happen, of course, but I don't think it's likely. Also because there's not only in societies in the West, for example, a lot of polarization, but also globally. So I don't think ties between, let's say, Europe and China are going to get any better in the coming years.
And at the same time, we also see a repatriation move that a lot of countries, or more and more countries, decide to store the gold on their own soil. I heard Serbia, they want to store everything in their country. Indians are also having already stored more than half of their gold on their own soil. Is that also something you are going to see more often in the future?
Yeah, that all ties in with this, economic nationalism and deglobalization and de-dollarization and less trust. And also with, after the Second World War, we had a great economic boom. And with an economic boom goes more trust in credit assets, more trust in each other between nations. And now that is falling apart. So there's less trust in credit assets. For example, U.S. Treasuries. There's less trust in your neighbor. So that's why you see this beginning of de-dollarization, which could take another, decade. But also less trust in storage facilities like in London, but also in New York. Strangely, last time I looked, foreign held gold in New York is going up. I don't know which country is storing more gold there, but I think it's clear that a lot more gold is now being held on own soil. Also because, for example, Poland is not only repatriating gold from abroad, it's also just buying gold and shipping it home immediately. So that's clearly the trend, that keep gold abroad, only bring it to a bare minimum, because in case of emergency, and the rest you can just keep it home.
What's also interesting is that you wrote a few times that you're expecting a new gold standard to arise, and that basically or potentially countries are coordinating to what extent they can buy gold and to a certain level. Because in a way, you would argue like China is giving the US also a present because of their buying, price go up, and that makes the balance sheets of the US also looks better because of the gold that the US has. So in a way, China is helping out the US and many other countries who already have a lot of gold, such as Germany and Italy and Russia. So it could well be that, like you mentioned in the past, that we are working towards a sort of a coordinated global indirect new gold standard. Could you shed your light on that and explain a bit better than I try to do to our audience what's happening here?
Well, the thing is, I found that from records and also from the data about what happened in the 90s, for example, that when Bretton Woods fell, that the Europeans were and also the gold price went up, but they couldn't redeem their dollars at the free market gold price at the US anymore. So, and there was a lot of military force, for example, in Germany, and the US blackmailed the Germans about you're gonna stay with your dollars, or we're gonna get our troops back, and you will be invaded by the Russians. So Europe had to go with the US after Bretton Woods fell, but they had the ID. So, the US is our friend, but, what about the future? And they started thinking about distributing their gold reserves equally, not only in Europe, but also globally. So what happened in the 90s, for example, is that, let's say, medium-sized economies such as Belgium, Austria, Switzerland, the Netherlands, countries like that, started selling massive amounts of gold. And but they stopped at the moment they had more or less the same gold relative to GDP as Germany, Italy, and France. And this has been documented. I mean, we can read quotes from Switzerland and the Netherlands and other countries that they wanted to equalize their gold reserves. And China is getting on par too now in terms of monetary gold reserves relative to GDP. And what you can say is that, of course, there is a risk with paper money, with fiat money. And the risk is that, you come into a situation in which it's politically too tempting to turn on the printing presses, which evaporates trust in your currency and eventually leads to some kind of, disaster, hyperinflation, whatever. That is a trust with paper currency. So if you want to have a plan B, what they want is a plan B that works. And it only works if everybody participates. For example, name a country, let's say India, would think about, okay, what happens to fiat money if it crashes, and what are we going to do? For example, they're going to buy Bitcoin. But if they're the only country that buys Bitcoin, their plan B would be not as good as when they buy an asset, a plan B that the rest of the world also has. And gold, has an unbeatable track record of 5,000 years. That it's immutable. It's fairly well spread already globally. But in the last, what I just described in this interview, I saw a lot of new gold flowing to China, which even balanced it more globally. And it works very good, because if you switch then to a gold standard, you don't have imbalances. What happened in the 19th century, for example, was that a lot of countries moved towards the gold standard, from the silver standard, for example, to the gold standard. Then demand for gold rose, and then the countries that were on the gold standard already suffered from deflation because the value of their gold went up, and so that had a deflationary effect. So if every country wants to move to a gold standard, and I'm not saying it has to be a classical gold standard or whatever, it can be many types of a gold standard. But if they all move to a gold standard, it works pretty well for them if it's equally distributed. So they're looking towards each other from, okay, what's their, what are they doing and what's their plan B? And then if Europe still has gold, and even the US, because they still have gold, they actually would like other countries to have it as well, because that makes their gold not, be of zero value. Let's put it like that, right? So Europe had the most gold when Bretton Woods fell, and so they started thinking about, okay, then we want to stick to this gold, and how are we going to do it? Okay, we're going to equalize it within Europe. But what they did, for example, in 1994, the Netherlands sold 300 tons. Who did they sell it to? China. So they were already busy with this balancing act.
Interesting. So maybe it doesn't necessarily have to be very explicit. It can also be like an implicit a setup where people just look at each other and think, okay, that player is doing this, that player is doing that, so I might as well do it as well. So it's a more of a game that people play without perhaps being explicit about it.
Yeah, definitely. And so what I just said about Switzerland or the Netherlands selling gold, because they literally, this is just text from official people, they had too much gold relative to other important gold holding nations. They did that, for that reason. And but a lot of the agreement isn't spoken out. So I don't think at the BIS they have meetings every month and they say to each other, okay, so what are your gold reserves? And you're buying some more, right? Okay, yeah, okay. It's more informal, and it more rests on logic and game theory.
Well, thanks so much, Jan. It was very enlightening. People can find more about you on X, of course, because you're quite an active user of Twitter or X. At the same time, you also write articles, of course, for Money Metals. I will put a link in the show notes. Anything else you wanna tell our audience before you wrap up?
No, you can always follow me on X and communicate there with me. I always respond to questions. And I haven't been writing a lot in recent months, but I'll definitely be back with more articles about China and other topics.
Well, thanks so much, Jan, and I look forward to doing this next time on Bonaire. That would be nice. So let's try
over.
that next year. So.
I can find you a hotel here.
Perfect. Thanks, Ben. Okay, take care.
Bye-bye. Thanks.